There were two markets I could have traded today, NASDAQ or S&P. Most chose NASDAQ and most of them lost. I made 2.8K today because I chose the stronger market and identified it minutes within market open. In this clip from our live trading room, you'll see how I read the strength in S&P, framed my targets, and waited for my entry model to form. This wasn't luck, it's a repeatable process. And by the end of this video, you'll know how to spot it too. All right, so fair value gap here. Market trades up into it, creates the doji. Right, in the right context though, right? Not just looking for dojis. Inside a level, we expect a reversal. So we want to see if we can stay below that doji candle. Same thing here with the ES. If we start to show strength through that fair value gap, then I would be potentially open to considering a price run higher, but I'll have to see how the price run starts to develop. Let's go over to S&P. Watching how we trade inside this 5-minute gap here. If we do get above it, start to show strength, then my attention goes to the equal highs here and these equal highs back here. All right, so looking at that 1 minute fair value gap that we've been watching on NASDAQ and S&P, you'll see here, we've done what we've closed above it and now use it as support. So let's study that going forward. Same thing here for NASDAQ, getting a nice closure above that. Let me show you. So IFEG, right? Closing above it here, using it as support, rallying. So now that's what potentially indicating what that we're seeing a shift, right? Shift in order flow. It's not the best fill there. I did enter with the market order. Should have entered with the limit inside that gap. That's all right though. All right, let's take our attention here over to the S&P. Stop loss has to go below here. And then see if we can get a run to the buy side here. So fair value gap here, we drop down. We match the high the low of that candle, the high of the fair value gap. And then you also see we hit the inversion fair value gap here. So want to see that remain bullish. Want to see us get above the first presented gap, use it as inversion, and then make that run higher into the buy stops here. All right, so risk gets reduced here. Since this would be a level I would be taking partials off at 15 points. That's $750 per contract. I would be scaling off partials if I had two contracts. So instead of just taking partials, I'm just going to reduce the risk. All right, so we're trading back down into the first presented gap in here. Want to see the act as an inversion gap as we already covered. Like how we closed above it. Now we're trading down into it. Want to see the act as support. All right, so risk is being trimmed essentially to just a bit under break even. One of the habits I've gotten into over time is whenever the market gets close to a limit order or it's in good open profit, I don't like to let that turn into a big red trade. And not that it would be a big red trade because my leverage is so low with just one mini. However, I don't like to take a loss after I've already been in a trade that has a decent amount of green. That's something that I've developed as a protocol. It's not like a hard and fast rule, but it's just something that I've learned to do over time. So you'll notice the bodies here, finding support inside that first fair value gap, midpoint. And now look at what they engineered here. All right, that's good enough for government work. All right, traders paid. So that's going to be about a $3,000 execution there. So here's the business going long. I was looking for this fair value gap. I wanted to go long as they traded down into that here, but they just matched the high of this candle and they didn't give me that opportunity there. But once I saw we hit the inversion fair value gap, we see the market did what? Stayed in the upper half. So then as soon as I saw that, I immediately went down into a 10-second chart. And then you see this inefficiency here. Let me take the arrows off here real quick. And then you see the inefficiency there. Here. I'm basically buying that. Like I said, I was bitching a little bit about my fill, but that's essentially what I was buying in there. And then holding for the run into the buy stops here. And you guys also may be asking, why going long S&P? Why not NASDAQ? Look at NASDAQ. NASDAQ didn't even get close to these highs here. S&P delivering a lot better run to the upside. So there's relative strength analysis, things I've been teaching you guys before, but I'll also go into a short review of that here and how I use that. Hopefully you guys were able to get paid. Leon sharing his execution. Let me go and check that out. Ah, nice. You got in a really nice discounted entry. Nicely done, my man. Would you use the IFVG here? Nice. Nice trade. Yeah, really good entry. As soon as we got that closure above that inversion fair value gap going long. Really good stuff. Real professional stuff. Testament of studying, putting in the work, and the executions reflect that, right? So buying the discount, covering in a premium. Really, really nice job, my man. So yeah, like I wanted to share with you guys on relative strength analysis. So if you noticed, which asset dropped better today? So let's go to NASDAQ. Which asset did we see drop better today? NASDAQ, right? So NASDAQ's a lot weaker than S&P. So if it's weaker, which one do I want to be buying? The stronger one, right? So if we go to regular trading hours here and here, look, NASDAQ's not even close to its 930 opening price. S&P's already blown through its opening price and hit the lower quadrant. You guys may be asking why I took profits at that particular level. Because I just want low-hanging fruit. It's non-farm payroll week. I'm trading against my higher time frame bias. Like I told you guys, the trade I wanted was the shorts because I wanted to go short into the targets that I gave everyone on Sunday. And that would have been a really nice clip to have, but whatever, I'm okay with that. Measuring the opening range gap from where we closed to where we opened. As soon as we smacked into that lower quadrant, I just want to take a partial there. Right? I still think we're going to get above that high because now those highs are relatively equal. But like I said, I'm comfortable locking in $3,000 for what, not even an hour's worth of work yet today. And that's going to be my only trade for today. So going to wrap it up there. Wanted to go into why I took that profit there. Because like I've told you guys, you always want to have the quadrants of the opening range gap, right? So I just want the low hanging fruit. 930 opening price, I didn't really want that. I wanted the lower quadrant because that's also above what? This high here. So this high has buy side. And you'll recall, remember when I took your attention to these equal highs here and here and how they left that? And I said, note that. What is that? That's equal highs. And then when they retrace it into that first presented gap, retail seeing what? Resistance. Hit it once, hit it twice, now it's going to sell off. So they're adding to their short position here because now it's a little bit of pressure taken off their neck. And they're thinking, they get a little relief because now the market's dropping and moving in favor of their shorts. Right? So as they're doing that, that's building buy stops here. So as soon as we're trading through those highs, I told you guys I'm scaling off a partial because on my other account, I do have 2 minis. And then I scaled off one here and then the last one inside that lower quadrant. So now on the upside, we do have consequent encroachment. I like that as a draw. And going to regular trading hours here, now you can see all these highs are equal. This high here is equal, this high here is equal, and this high here is equal. So what this retracement is doing is the same thing I told you here. It lets a little bit of pressure off retail's neck that's trying to short this market. Why does retail want to short the market? It's been going down. They haven't predicted that it's been going down the past 3 weeks like we have, right? And then at the same time, it drops at 930. So they're doing what? They're chasing this. They had no idea what they were looking for. They didn't have any discount targets, but they just see it drop at the open. So it must be what? It must be time to go short because the market's been going lower. So it's time to short it here. So what I'm looking for when I'm trading is where's the uninformed trader stop loss? And that's going to be these buy stops up here. And that's how I was able to confidently hold for over 20 points on the S&P. And then now you've seen they've blown out these buy stops here. Well, why didn't you hold? If you knew they were going to get there, why not hold? Because at the same time, when I'm doing my trading, I'm not trying to impress anybody, right? I'm not trying to make a highlight reel. I'm here to make fucking money and get paid week after week after week. And I don't need these highs with 20 handles on 3 contracts. That's, like I said, good enough for a non-farm payroll week Monday. So that's kind of the thought process as to why I took it off there. Even though I'm able to give you these highs, maybe wondering why not hold it through it. There you go, right? I'm not trying to finesse a whole lot of things on non-farm payroll week. If the market's going to offer me 3K in under an hour, I'm going to take it, get paid. And even if I can see further discount targets, I'll just continue delivering the world-class education you guys are used to here every single day. I hope this one was insightful. Now you know how to pick the stronger market and not get stuck in chop because you're unable to identify which market is stronger or weaker. Like and subscribe. Comment down below what more you'd like to see from us. Take care.